Have you ever felt those market jitters? You know, that constant tug of war in your head between playing it safe and wanting to chase those really big gains? It can be absolutely paralyzing. Well, today we're going to dive into a pretty fascinating strategy that's designed to solve that exact problem.
So let's start with a problem that I'm sure every single one of us has faced, especially when the market feels like a total roller coaster. It's this constant battle between two really powerful emotions.
And this is the core question, right? How in the world can you balance that very real need for security with that undeniable hunger for a huge win? I mean, on the surface, it just feels like an impossible choice you have to make.
On one side, you've got fear. It's that voice in your head saying, hey, let's just preserve our capital, let's not lose what we've worked so hard for. But then, on the other side, you've got greed. That's the voice pushing you to maximize growth, to really see your money multiply. And this fight, it can leave you totally frozen, not sure which way to.
But what if there was another option? You know, a third way that doesn't force you to choose one side over the other, but actually lets you embrace both of them. Let's take a look at that solution.
It's called the barbell strategy, and the core idea is, well, it's pretty radical. Just picture a workout barbell, right? You've got heavy weights on both ends and absolutely nothing in the middle. This strategy does the exact same thing with your portfolio. You put your money at two opposite extremes, super, super safe and super, super risky, and you just completely ignore everything in between.
And the split is actually incredibly simple. The vast majority of your portfolio, we're talking a full 90%, is locked down in stuff that's extremely safe. Then you take this small 10% slice and you set that aside for the high-risk, high-reward place. Honestly, this 90-10 split, it's the key to the whole thing. Okay, so let's break down the biggest piece of this puzzle first. We're talking about that massive 90% safety net. This is the bedrock of the entire strategy. 90%. Just let that number sink in for a second. The overwhelming majority of your money isn't there to make you rich overnight. No, its job is to make sure you don't become poor. It's basically your financial fortress. So yeah, this huge chunk of your portfolio, it has one job, and one job only: capital preservation. It's your anchor, making sure that no matter what kind of crazy storm hits the speculative markets, your foundation is totally 100% secure. So what do we mean by ultra safe in the real world? Well, we're talking about things like U.S. Treasury bills, backed by the full faith and credit of the government, or even just simple high-yield savings accounts. The goal here isn't explosive returns, it's stability and predictability. That's it. Okay, now let's talk about the other end of the barbell, the greedy part of our plan. This is where things get really, really interesting. Just 10%. And listen, this is so important. By limiting your high-risk bets to a small, defined chunk, you're putting a hard cap on how much you can possibly lose. I mean, the absolute worst-case scenario is you lose this 10%. But your foundation? It's completely untouched. But the upside on this little slice? It's potentially unlimited. This 10%, this is your rocket ship. It's where you get to swing for the fences and take some calculated shots at those massive, game-changing returns that could seriously supercharge your entire portfolio. And what kind of stuff lives on this end of the barbell? Well, think about highly speculative, high-potential areas. Things like cryptocurrencies, or maybe some cutting-edge AI-focused stocks. These are the kinds of investments with a huge potential upside, but also, let's be real, a very real chance of going to zero. So what's the big idea that ties this all together? Because it's really more than just a set of rules, It's a whole philosophy on how to not just survive all this uncertainty, but to actually benefit from it. And this isn't just some random idea somebody cooked up. It comes from the work of Nassim Taleb, who's a really well-known author and risk analyst. He popularized this approach as a way to become what he calls anti-fragile. Basically, to be strong against negative shocks while staying wide open to positive ones. This quote just nails it. The barbell strategy is a structured way to engage with risky investments without being reckless. It's not about being a gambler. It's about having a system. That structure, it changes everything. So if you remember one thing, remember this. The barbell strategy isn't anti-risk. Not at all. It's all about containing risk. You build this indestructible fortress with 90% of your money, and that gives you the freedom and the psychological safety to take some really calculated, high-potential shots with that other 10%.
So as we wrap up, it really leaves us with a powerful question to think about. Is your current approach built just to survive, letting fear run the show? Or is it maybe built only to thrive, taking on way more danger than you realize? The barbell strategy says you don't have to pick one. Why not build a portfolio that can do both?